Welcome in, welcome in. Happy Wednesday. Happy Wednesday. How was everybody's Wednesday? Did you trade today? Did you set out today? How was everybody's day? Had a pretty bad day in the market in general, but hey, whatever. You know, you win some, you lose some. Made up for it working the old wage slave. So, but hey, you win some, you lose some. How did everybody else do today? I'm gonna give it a minute before we get things going. Gotta check a few things. How's the audio going? First time we are multi-streaming the segment. We did a little test last week. See how it would go. Seems like everything is functional. Let me know if the music's too loud. Shouldn't be, but let me know if it is. All right, so let's get into it. So what was the story of the market today? Major indices, the S&P 500 closed up 24.74 points, or 0.4%, almost a 0.5%. Rebounding from recent tech-driven dips amid lingering AI valuation concerns. I'm sure everybody saw that Michael Burry is that guy's name? The dude from The Big Short. Shorted Palantir, but I heard there was some, I forget the specifics on that, but it wasn't really quite alarming as a lot of people are making it out to be. But so the NASDAQ now rose 151 points, or 0.7%, to 23,499, led by tech sector recovery. The Dow Jones gained a 0.5% to finish, supported by broad gains and upbeat economic data. Intraday S&P hit highs around 68, 80, 22 before settling lows near 6,750 amid early volatility from AI worries. All right, daily drivers, the winning sectors of the day. Technology led with a 0.8% gain driven by NVIDIA, which had a over a 1.5%, 1.6% gain, and Alphabet with a nearly 2.5% gain. Communication services were up over a 0.5%. And losing sectors of the day, energy dipped at 0.2% on oil price weakness. Utilities flat amid defensive rotation. Sector spotlight. Let's pull up the heat map. Tech rotated back in as buyers dipped on AI pullback. Energy surged earlier but faded on dollar strength and demand concerns. Key economic reports. ADP, private payrolls rebounded stronger than expected, signaling robust job market. U.S. services activity hit an 8-month high with solid new orders. And news flashback. Pre-market headlines included ongoing government shutdown, now the longest ever at 36, raising economic uncertainty. So what surprised you the most today? Just write in the comments what affected you most today? Or what surprised you the most today? What surprised you the most today? shit. Dang, I can't see the chat like that. That sucks. Well, whatever. I'll just have to have this pulled up. Full screen, and then we'll have to do this. The boy needs to see the chat. So we'll pull this up. Bam. Okay. So back to, yeah, so what surprised you guys today in the market? Was it the tech rebound? Did that surprise you guys? Despite the high valuation or strong jobs market data amid the shutdown, what surprised you guys? Pull the indices back up. Ooh, don't want to do that. Let me turn. Oh, that's the wrong way. Let's turn the light back up. There we go. Okay, yeah, so we'll move on. Other news. Oh, wait. Major earnings. Let's get into the after hours movers and news. Major earnings report today. Man, we skipped a show last week. And man, did we miss a big earnings week, but that's okay. We got a big earnings week this week. Big earnings today. Yeah, big earnings today. Let's take a look at our list. So Shopify, let's remind me to take a look at these because they're not in my notes. Novo, NVO, Qualcomm is in the notes. ARM and Hood is in the notes. So remind me to go through those others before we finish. But Qualcomm reported fiscal Q4 results, beating estimates, and looks like the stock had little change after the market close. AppLovin and ARM and Hood also out, and it looks like App is up on strong guidance. Hood mixed on user growth, and compared to expectations, the QCOM exceeded on AI chip demand. Peers like AMD rebounded intraday after prior dips. Other news, no major M&A today, but Fed comments on rate stability amid strong data. Geopolitical tensions in the Middle East eyed for oil impacts, my bad. Big daytime movers, Seagate, ticker symbol STX, and McDonald's, ticker symbol MCD. I hold McDonald's in my dividend long-term portfolio. Among top gainers, review intraday swings in AI names like NVIDIA. All right, let's go through some what-if scenarios. If Qualcomm gaps up tomorrow, which watch-related ETFs like SMH for chip sector ripple. If shutdown ends and the broader market relief could boost cyclicals. I don't think that shutdown will end anytime soon, though. All right, let's take a look at the global glance. International ties to U.S. trends. Asian markets dipped over 4% on AI valuation fears spilling from Wall Street. And the Chinese are stable, but tech-heavy KOSPI fell sharply. And the reasons are selling pressure in AI stocks amid global bubble worries. China stimulus provided some cushion. European markets. The STOXX 600 rose almost 4%. The DAX is up almost 0.5%, and the FTSE gained over 0.5%, following U.S. recovery. Ties to U.S. tech rebound and strong data supported sentiment. And now for the currency and commodity check. In the U.S., USD strengthened against majors. Oil fell amid dollar pressure, and gold rose 1.28% to 3,982 amid or on risk aversion. Let's take a look at the gold chart. We haven't looked at that in a while. GLD. We'll go through these later. Oh yeah, a little bit of indecision though. I see an indecisive candle. People are still selling big time on gold. But so that's gold. So the anybody got any tips on the broader market? Otherwise, that will wrap that up for the global glance. Oh shoot! I forgot a segment, man. I forgot to prepare a. I'm gonna do that right now, real quick. We're gonna go through our. Let me take a look. I may have actually made one already. Let's move that more. Documents. It would be in documents. Probably stream. Oh, dang. Nope. I didn't make one for this one. Shit. So I'll have to do that quick. Or not. Dang, so no curriculum corner this week. That's a bummer. That's my bad. I forgot to make that segment. Or I forgot to make notes for it. My bad. Oopsies. Oopsies. Let's pull up the other show notes here. So skip curriculum corner. And let's go on to the trend tracker. All right, emerging trends. AI defense stocks are heating up due to government contracts, renewable energy rallying faster than AI in 2025 amid policy support, and meme stock revival sporadic, but watch for volatility. Let's pull up some ETFs here. XAR. Oops, that's Z. XAR. For aerospace and defense, as you can see, it has seen some recent pullback, big time pullback. Let me pull this up quick. Oh shit, we already did that one too. You gotta remember to do the send-offs too. Shit, so we're done for curriculum corners on. We're just left with send-offs now. Wow. Crazy. Yeah, if you're new to trading, check out the Best Loser Wins. It was one of the better trading books I have read. Alright, so. And then now let's pull up some clean energy ETFs. ICLN, ticker symbol ICLN. The iShares Global Clean Energy. As you can see, wow, major buy candle. Let's pull up the short term. Let's pull up the hourly candle. candles. And big sell-off overnight, and then today it just shot up. All right. So the watch list, okay, no, we're not done yet. Okay, I'll say spending 50 US growth, forecast short term. Okay. But, okay, yeah. Short term plays in defensive contract. Renewables for long term hedges. As you can see, let's pull up long term. Long term. Obviously, past performance doesn't indicate future performance, but long term, renewables is quite good. So let's take a look. Mythbuster is AI overhyped valuations. Valuations high, but growth is real. Debunk with data showing. Blah, blah, blah. Yeah, I don't have that data. Sorry. Sorry, I'm not doing all that. I need to tweak my notes a little bit more. Okay, so now let's go to the watchlist workbench, where we go over some of the stocks we picked on Sunday's show, the weekly crypto candle close. Whoa. Oopsies. Let's... No, I didn't want to make that full screen, actually. Pull this back. There. Now I can see the chat. Okay. Why am I back on that segment? Okay, so... let's take a look. So Qualcomm on earnings did good. What was that date? Sunday. The 2nd was Sunday. So on the 2nd was when I made these picks. So Qualcomm, as you can see, was in pretty good since. Although, this week, it saw a pullback Monday. And then, today people bought it up. Let's bring it into the hourly for short term. And, ooh. We're below the 200-day moving average. And so... careful with that one. I remember seeing FRPT on the move, and on Monday too. Let's go to the daily for long term. We made a quick scalp Monday after work on FRPT, Freshpet. And as you can see, since the 2nd, here we'll do the 3rd, because 2nd was Sunday. So it would have been a good one. Now CVS, let's take a look. CVS, another decent one. Not as good, but on would have been a bad one. Although saw some recovery today. Stayed within the previous day's range. Stayed above the 200-day moving average. BioNTech. And this one, again, saw some indecision. Sold off today. Buyers still buying it. This one seems to be stuck in that range of 100 and 300 and 110, 100 and 100. Major downtrend, though, long term. So beware, beware. Set your stop losses. All right, let's go through Palantir. Palantir gap down big time and continued the downtrend. Probably profit takers. I mean, I kind of shat when I saw it hit 200 the other day. I was like, what? Especially as a guy who owned it at 76. Kind of bummed out about that. But you win some, you lose some. Part of the game. And BRK, wow. November 3rd, looks like it's sold off a little bit. But major green candle yesterday, and today it held the price increase. So, and looks like that is sticking within that long-term trend. That is Berkshire Hathaway. And Qualcomm, we just looked at Qualcomm. And it is continuing that upward trend. Sold off. Pulled back on Monday, but still stayed high. Gapped down Tuesday. And then looks like it was bought up today. Buyers bought the dip. Okay. Prep. All right. Earnings for more tech. I'm not gonna look at futures. We don't really cover futures here. Risk radar. Be on the lookout for black swans like election-related news or shutdown resolution, hedging, gold positions, or VIX for protection. VIX calls for protection. Well, no, I'm not going to recommend calls. I don't do options. I'm not an options trader. Maybe someday when I know more about it. And so, actual strategies. I see this is all stuff where I just need to, like, redo. Let's take a look at our portfolio today. We took a big hit today. We got stopped out of Compass, unfortunately. Let's take a look at that. CMPS. Major red candle. Not sure what caused this. There are no major news, although I did see about a possible sooner than expected FDA approval. So that has me a little worried. So maybe it's not an approval, maybe it's a denial, and that's what's happening here. Maybe people within the company are selling off. Or maybe other holders who know about that sold off, so I don't know. I see a big red candle though. We'll have to see what people do tomorrow. There was high volume yesterday. This one really surprised me. It had been in a downtrend, but it being that big of a sell-off day really surprised me. I got stopped out, but I am, and I may regret this, I am dollar cost averaging back into this now. I forget how much it is. It's not much, but I want to get ahead of the game just in case it turns around tomorrow or turns around soon. But I don't want to put in too much DCA because then obviously you lose a ton of money. I won't gain as much, but also won't lose as much if the trend really does reverse. I see we blew through that gap, that small gap, and I guess I would watch, honestly, I'd watch now. I would see if this 75, 575 range holds as support, or holds as resistance. This previous support here. But other than that, I would watch in between the $5 range up to the 575 range, and just see what it does in that range. It's, you know, it can go one or two ways. So, what's another one that we should look at? You know what I should pull up? I should pull up this, and I'm gonna go grab my pipe real quick. And actually, we should do curriculum corner. Oh, I didn't highlight much in. Oh, here we go. Fuck. Or in fact, okay, so I am gonna do curriculum corner. In fact, the tendency to by I will be right back 1 second. Wow. Okay. So that's symbiotic. That pulled back. Hold on. Okay, so let's go over some more of our portfolio. Um, there is Symbiotic. Man, that was up like 700 bucks up here. Yesterday, I was a little worried. Yeah, yesterday I was a little worried, but I didn't take it as alarming. And I didn't panic sell. And you know, we're back 200 bucks. So, and but man, the rest of my portfolio, man, has been really taking a hit. We started dollar cost averaging into Archer. I knew it was a bad time, but I'm getting ahead of it because of Florida is putting in Vertibuses, and Archer is one of the companies that's a long-term for me. And APLD is finally seeing some maybe comeback. Hard to say. It's only been a couple days. It's been stuck in this range here, but it's testing that gap again. So be on the lookout for APLD. I'm pretty bullish on them. And then Compass, man, stopped out of Compass. What a heartbreaker. Embraer. Well, we're finally positive on Embraer again. Again, bought it at a bad time. I knew I was buying it at a bad time, but again, Florida Vertipus, long-term strategy for me. Plan probably will hold this longer than a year. Would be my expectation. Much longer than a year, but we'll see where it goes. Evax again, another Florida bus. These are all for Florida Vertibus. Google is up. Don't own much Google though, so. And Lithium America is, I think, yes, finally had a green candle. It's spinning top, but still a green candle finally. This has taken quite a hit after a bunch of analysis downgraded it. Lumen is continuing its uptrend. Competitor with Microsoft, among others, and that's pretty much it. Redwire again taking a hit. RCAT taking a hit. My portfolio overall took a big hit today. Continued to take a hit today, but hey, that's okay. You know, I don't see any major reasons to get out. You know, we're just testing these caps. You know, it's not normal for 4 gaps to happen, gap ups to happen. That is not normal. So I see this, you know, this pullback as a normal correction. So I see nothing alarming. And so let's go on to the misplaced, rather. Let me hit record here because I post this on YouTube. To Curriculum Corner. All right, and Curriculum Corner is where we take knowledge from books. And today's book is a short story, Financial Euphoria by John Kenneth Galbraith. And it's my favorite section, educational section. And if you haven't read it, it is a must read for any investor. It is short, sharp, and packed with timeless lessons on why markets go boom, then bust. The quote we're unpacking comes from Galbraith's analysis of speculative bubbles throughout history, like the tulip mania in the 1600s or the South Sea bubble in the 1700s, he writes, nothing was said or done. Actually, let me take it from the book. Nothing was said or done, in fact, could be done, about the decisive factor, the tendency to speculation itself. All right, let's break this down. What Galbraith is getting at here is at the heart of every market mania, human nature's irresistible pull toward speculation. Speculation isn't just buying stocks or assets hoping they'll go up. It's the frenzy that builds when people start chasing quick riches, ignoring fundamentals, and fueling bubbles with borrowed money, hype, and FOMO. Think about it. In every bubble, regulators, economics, and even the public might tinker with the rules, interest rates, or warnings, but no one can truly stop the core driver, our innate tendency to speculate. Why is that decisive factor so unstoppable? Galbraith argues it's baked into the system. During good times, optimism snowballs. People see others getting rich and think, why not me? Greed overrides caution, and suddenly everyone's piling in. Governments or central banks might try to intervene, raising rates, issuing alerts, but by then, the speculative fever is too hot. It's like trying to put out a forest fire with a garden hose. And here's the kicker: speculation often masquerades as innovation. Subprime loan mortgages sound familiar? Anybody? In the dot-com bubble of the late 1900s, it was about the new economy. In 2008, it was subprime mortgages dressed up as safe investments. Today, while we've seen echoes in crypto hype, meme stocks, and even AI-driven rallies where valuations soar on promises, not profits. The lesson for us as investors, don't fight human nature. Understand it. Speculation will always rear its head, so build your portfolio with that in mind. Diversify, stick to value investing, and having an exit strategy before the party ends. Remember, as Galbraith warns, euphoria is fun until it's not. Bubbles burst because speculation eventually collides with reality. Whoa, 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 whoa! What do you think? Have you spotted speculative tendencies in today's market? Drop your thoughts below. And if you want the full book, grab it. It's under 100 pages. Super easy read. Some of the language is a little bit older, but pretty easy to get by that. Back to the charts tomorrow. Stay smart out there. Stay nimble. Set your stop losses. And that's it that's it tonight. Y'all have a good one. Let me know in the comments if you got anything. Got any stocks for me to go over quick before I log off? What do you think? What should we got anything before we go? Otherwise, we're gonna head out. We're gonna stick with our picks. Really keep a lookout for FRPT from Sunday and Berkshire Hathaway. Those guys are on rippers, and Qualcomm too. Came back a little bit today. Came back quite a bit today. So be on the lookout for those. If nobody has anything in the chat from me, I'm gonna log out and call it a night. We'll see you back here Friday, hopefully earlier than usual or lately. But we'll shoot for 2:30, but that's not always possible. Usually 3 o'clock is the more possible time. But if that's it, I'm going to log out. Y'all have a good one. Peace.